soda. Remy boys that know fast money don't slow. No one can
Hey, welcome to Colemon's Kitchen Ideas. So today we are going to be talking about Forex, and I just want to give out some pointers on some people that are beginning Forex. So the first thing I want to say is that I am going to show you my account, how I started out, and trading, and then I'll probably just do like a trade on there to show you just kind of like the basics. So before we get started with that, I just want to give you 5 pointers for beginners, things that I didn't know that I kind of had to pick up on my own. So the first thing is I do recommend getting a broker if you're going to use MetaTrader 4, which is an app that kind of helps you trade, also using with a broker, and I'll show you that in the next part of the video. So I'll link 2 brokers down below that I found are pretty easy to get set up with, especially if you're here in the US, because a lot of the other ones are kind of hard to set up, and they require a whole bunch of stuff. So I'll recommend those 2 that are down the bottom. If you find other ones that you like, that's cool. So the second thing is to start out with a demo account once you get set up with your broker account. And the reason why I say that is so that you can really get the feel of the market, so you understand, you know, how the trading works, just kind of getting your hands really wet and understanding how the market works. Okay. So the third thing is if you do decide to trade, and that's even with a demo account or with or a regular account, I recommend trading early in the morning. I personally get up at 5 o'clock in the morning and just kind of see what's low so I know what to buy into, and then kind of look at the predictions to see what's going to probably make profit for me. So on that note, I also will sign up with like my email company or something like that, like Forex.com. They send out like a few forecastings on some of the accounts that are going to accrue a good amount of money for your trade. So that's basically it. I don't recommend trading on Fridays. That's just my personal opinion, but if you get good in advance and you know what you're doing on Fridays, that's cool. But me, every time I traded on Fridays, I seem like I just lose my pocket. So that's just me personally. If anybody have any pointers on that, I really would love to take them and see what you're doing and who you're trading with and all that good stuff. So with that being said, let's get started. I'll show you what I was doing on my account, and then there's also a few other couple of videos towards the end showing you how to read the candlestick charts too. So yeah, so if you like this video and you want more, just let me know, and like, share, and subscribe, and let's get started. Hey everyone, so we're gonna get started, and I'm gonna show you what you need. The first thing you're gonna really need before you start trading is I recommend downloading the app called MetaTrader 4. And that is actually going to help you guide so you'll be able to trade a little bit less and start out, and it's actually more controlled. And then also you're going to want to get a broker so that you're able to trade on there with a demo. I know that you can trade on there with basically with MetaTrader 4, but it's better to get a demo with a broker so you actually know how it really is when you're trading live with that actual account. So with that being said, I'm going to show you how to go into the MetaTrader 4. I'm going to click on it. As you can see right now, we are live, and I have some accounts on here that I have been holding. Some of them I've been holding for a couple of weeks. Some of them I've only been holding a couple of days. This very first one I've been holding a couple of days. So what I'm going to do, I'm actually going to go back over here down to the bottom left where the 2 arrows are. And I am going to click on the very top one with the blue arrow to the left, which is the auto PLN. And I'm just going to hold it down, and I'm going to open the chart. So the first thing you want to look for is down here on the bottom. You can see the blue line, the graph. I want to see if that line is going to be going up or if it's going to be going down. I kind of want to see how the market is looking. And right now it looks like it's actually going to be going up. this would be kind of an okay time to buy, but not really a good time to buy. The best time to buy is, let me scroll back to the history. It's kind of like when you're low. If you see this dotted line right here, I'm gonna try to see if I can circle it right there. So when it's low like that, that's the best time to buy. The best time to sell is obviously when you're up into the blue. So let me go back down to the bottom left where the 2 arrows are. There we go. And I'm gonna go back into that same account, hold the button down, and then I'm just gonna go ahead and do this for the heck of it. I'm gonna place a new order just to show you. So I am going to bet $1, which you see right here in the middle, 1.00. And I'm actually just gonna go ahead and go in the market right now and buy. There we go. So you're always going to start out negative. The second one is the one I just bought. See, it's negative $96.14, but that's okay. Every time you buy, you're always going to start out negative. You're never going to be in the blue. It takes time for it to go up. So another thing with that graph, which I'm going to go back into because you can click right on that. And if you're reading it right, go to chart at the bottom right there. There's always going to be a pattern on this chart down here. All right, same thing with the candles up here where the red line is. It's a pattern. So I had this one girl tell me, she said it's a pattern. So if there's a guy that cheats on you and he keeps cheating, that pattern is going to keep coming back. He may be good for a moment, but then it's going to get bad. It's the same thing with trading. It's going to go up and then it's going to go down. So you can just scroll back and check the pattern so you can kind of see what the pattern is, so you can kind of see what's going to happen right here in the future. So I'm just going to scroll it all the way back. All right. So with that being said, always get you a broker account first with a demo, and then you're going to want to just get a demo account and practice trading. Go in, buy, kind of see, get comfortable. Broker demo accounts are free, so the only time you're going to have to really buy is when you actually go in and start doing live trades. Forex.com is the one that I use. If you're going to trade live, you have to start out, I think it's with $100. So that's not bad, because I've seen some on there too where you have to put like, you know, 200, 250 or something like that. So hopefully this helps. I'm actually going to stick a little video in here right behind this, excuse me, so you can actually see how you use the candlesticks on when it's a good time to go and buy. For me, it's kind of hard still to read the candlesticks. I'm not saying that it's a bad thing at all, not at all. It's just that I always use the graph down on the bottom. That's what helps me, and it helps me kind of guide at when to buy and when to sell. So hopefully this helps somebody out that is starting to trade in Forex, and kind of make it have a little bit of sunlight on your end, so you don't seem confused by all the charts and numbers. It's just intimidating to look at, but it's a little bit more easier when it's explained from somebody that's just starting. Like me, I've only been in the business for about 6 months, but I've had great success with trading, and I've had, as you can see, not so good success. So another thing I do want to tell somebody is I'm not that good at trading on Fridays. I don't know if anybody else has had any bad luck on Fridays. So I don't trade on Fridays, and I always get up early in the morning and trade, usually around 5 to 6. I go in and I just kind of watch the market and see what it's doing. I also watch the news and see what's going on around the world. That also helps out. And then you just always want to kind of be on guard. You can go in there and put a cap on some of the trades too, so that you won't lose a lot of money. So with that being said, I hope this really helps somebody out, and I'm going to show you this last video, which is attached to the end, on how to kind of read the candlesticks, and that's it. So thank you again for watching. Stay tuned, and email me if you have any questions, and also email me if you have any other pointers too. I really appreciate that. All right, thank you.
To know how to master candlestick patterns. Here's how. Here we have a bullish and a bearish candle. Each candle has an open, high, a low, and close, with the only difference being that a bullish candle closes above where it opened and a bearish candle closes below where it opened. Each candlestick represents a period of time, for example 1 hour. So if at 5 o'clock price starts at $10, that's the open, and if at 6 o'clock price ends at $20, that would be the close. The distance between the open and close is drawn as the candle's body. The highs and lows represent the maximum and minimum price points that were tested within a time period. These outer tails drawn on candles are called wicks. The majority of bullish candles will appear in a bullish uptrend, with the majority of bearish appearing in a bearish downtrend. Buyers and sellers always fight for control of the market, so if there's an indecision, you end up with these doji candles. Follow for part 2. As a trader, candlestick misconceptions online, so let me address them. The first misconception is thinking that candlesticks can predict the markets, which is not true. Candlesticks are simply an optional chart style that can show you historical data of what has already happened in the markets. The second misconception is that candlesticks can replace fundamentals or fundamental analysis, which is false. Now, candlesticks may or may not be seen for technical analysis, but they do not replace the essentials of needing to do your research for fundamental analysis. And the last misconception is that only candlestick charts should be used for technical analysis, which is incorrect. On top of understanding the price action and the market sentiment, there are multiple chart styles that can be used for technical analysis, with each having its own pros and cons, so the choice is subjective. Follow for more. So there are some common candlesticks. And if you don't know, that's what these are. Candlesticks are the number one thing I look for when trading. It allows me to get a sense of how the price of the stock behaves. Then I can use that information to time my entries and exits when making a trade. This is your generic candlestick. Every candlestick has 4 parts: the open, close, the high, and the low. The open is what the share price was of a stock at the first instance the candlestick opened. The close is what share prices were trading at the end of the candlestick respective time frame. The high and low are the highest and lowest points that the share price reached while this candle was open. Now, if this candlestick represented one day, we would know that at the start of the day, share prices were here. Then at some point throughout the day, the share price dropped all the way down here, but went up all the way up here. The close price is where the shares were trading at the end of the day. This is a green candle because the close is higher than the open. A red candle would mean the close is lower than the open. If you have money in the stock market and don't know how to read a candlestick graph, listen up.